It is Friday, April 4th, 2 days after Liberation Day. I hope you're winning. We got a lot. Okay, I'm going to go over the core portfolio. I'm going to go over my thoughts. I was on Spaces yesterday with Tom Lee, who has blocked me. I was on Spaces with Dan Niles. I actually got to talk to Dan Niles, and I'll tell you about the funny interaction that happened. If you want to listen to it, you can. We're going to talk... FYI, we're in a bear market, and you're in a bull market until you're not, was the point yesterday. We'll talk about what's going to happen. We'll talk about the news. It's coming in quickly. There is going to be need to be some emergency measures, I believe. So I also raised some cash yesterday. I sold a bunch. There's a stock in the core portfolio that I sold out of completely that I just don't see any further upside on. So we'll talk about it. First off, tough day in the markets. I lost half the value of the Florida house that I was going to buy. It didn't feel good whatsoever. I said it yesterday, and I'm saying it again today. You're in a bull market until you're not. We are not. Be fully clear about that. You are not in a bull market. You take a look at this weekly, and we've officially lost confirmation. And when you've lost confirmation on a weekly in a bull market, that's not great. That's not fantastic. So you've got to watch the VIX. You've got to watch things. There is one thing that came out which is drastically different than many things. And it was this note from a bunch of analysts, including Dan Ives. It's Dan Ives. Okay. And I want to read you a little portion of this. And I included this. I'll include this screenshot. And so if you don't have Seeking Alpha, don't worry about it. I'm going to include the screenshot of the important part. From the dot-com bubble and burst to the financial crisis to Europe debt crisis to COVID-19 lows in March 2020, never have we or others that have covered the markets for 50 years seen a self-inflicted debacle of epic proportions like the Trump tariff slate over the last 36 hours. Analyst by Dan Ives, led by Dan Ives, wrote in a note to clients. Instead of a reciprocal trade solution, the Trump administration laid out a convoluted set of numbers calculations that appear to be taking each nation's trade surplus by their imports with the U.S., the analyst explained. Understand this, and this is just me saying this. Trump has been convoluting in the messaging tariffs and trade surplus deficits. To go on with the note, the concept of taking the U.S. back to the 1980s manufacturing days with these tariffs is a bad science experiment that in the process will cause an economic Armageddon in our view and crush the tech trade, AI revolution theme, and overall industry in the process, the analyst added. That's the market you're in. So I'm not sounding alarms. I'm not telling you to sell out. You make your own decisions. You are big boys and girls. We haven't worn diapers. If you're listening to me, you're probably not in diapers. So you can make your own decisions, but understand what we're in. And again, there is panic. That's not a reason to sell. You have to have a plan. We'll go over what my plan is and what I did yesterday because I made a bunch of moves. But overall in the market, this was the 7th worst intraday session of the Dow Jones in its history. Apple was down over 10%. My Apple, my poor Apple. Okay, we're going to go look at the VIX. The NASDAQ ended down 6%. Let's go look at the VIX because right now, I haven't looked at it. Last night, it was at 30. Let's see. We're at 39. You're up 32%. If you took me on the UVIXY trade, like several people in the private Facebook group said yesterday that they did, Let's just look at a 5-minute trade of UVIXI. This is a leveraged, ultra 3 times leveraged ETF on the VIX. This is a 5-minute chart, okay? Yesterday, we talked about how this was a great 2 hours, okay? During the announcement of the tariff trade, Liberation Day. If you've just bought and held, I wouldn't suggest it, but if you bought and held, you're up 51% in one day on this, okay? The top was 66%. Is it the top? Look at the 52-week range. You're in the middle. Could you get worse? Absolutely. And there's worse coming right around the corner. We're going to talk about my spaces episode, but trust me, in 5 minutes, I'm going to go on a rant that you're going to want to hear about what's going on. Okay, the NASDAQ ended down 6%, S&P logs worst day since 2020, which, by the way, that was when Trump was in office. This is self-inflicted. I was on with Tom Lee yesterday, okay? This particular one. I think we are in Bizarro World. For all you Seinfeld fans out there, Bizarro World is where everything is opposite. Jim Cramer is bearish and the market's going down. Tom Lee is fucking bullish and the market's going down. Tom Lee has been right, more right than wrong. He's wrong. Okay? April 9th, Tom Lee said, is where the tariffs may come off and we may be looking at that face-ripping rally. How's that face-ripping rally working this week, Tom? So I'm a little bit skeptical of Tom Lee. So you can listen to him on this space. He lays a great plan out. But again, I'm slightly skeptical of him. And the reason is because it's so unpredictable. And there is one person that is in charge of this entire market. And the next 10% is on one person. We'll go into that a little bit later. But then Dan Niles joined me on the space. And it wasn't just me. It was a bunch of people. I was in rare air. I mean, listen, I listened to these guys for guidance for years and years and years. But I asked, it's about at the 130 level, I think, 131, 132, somewhere in that neighborhood. 132 is where you can listen to it. 1 hour and 32 minutes, okay? I asked Dan about Apple. I said, give me some good news. I said, they don't have anything, blah, blah, blah. Dan, by the way, Dan Niles has been a very big bear on Apple. He's been right. And I told him his note about going into cash as his number one position to begin the year, I need to Venmo him. Honest to God, because that's the guy where I sold a bunch of things at the beginning of the year, and I'm sitting on a lot of cash. I have redeployed some of it, not all of it, but I've redeployed some of it. But I owe him a Venmo. And I asked him about Apple, and it is funny because I said, give me some hope. And he said, no. He goes, shit company. I mean, he just went off. But after I asked him about that, he actually did bring in the Mag 7. And one of the things, remember, he's got a master's in electrical engineering. He's a tech geek, and he knows this stuff. And one of the things he went over was NViDIA. And if you want to read his notes, this is pretty much what he said on this space. He's super bullish on NVIDIA, but he made the caveat. Okay? He thinks Microsoft pulling back on, and the hyperscalers pulling back on some of their spend and some of the chip restrictions that are going in. NVIDIA owns inference, but he likened this to Cisco in the 2000s. And if we go and look at a monthly on this one, you'll see Cisco here up to the dot bomb. You'll see several pullbacks in Cisco during this period where everybody was like, oh my God, they're going to stop spending at some point. During that time was the time to start buying. And NVIDIA, he said it's kind of the same thing. Now, NVIDIA is under $100. I repeat, NVIDIA is under $100. The valuation makes sense, But we are not in a bull market. And make no mistake about it. With Microsoft pulling back and saying they want to rent data centers instead of buying chips, you may see a significant pullback during this earnings season of we're going to pull back some money from our capital spend. That's going to kill NVIDIA. People will start selling this because their average purchase price is $20. Okay? But Dan pointed out, there's going to be two steps to the AI revolution. The first is what we just saw with the H100s and things of that sort. Okay, that's the first one. And you saw NVIDIA pop. The second is going to be when inference starts. And you hear Jensen Huang talk about this. Inference is going to require Blackwell and larger chips. You're going to, as a hyperscaler, as a large language model, you're fine doing DeepSeek right now, but you will absolutely need larger chips. And that's where NVIDIA is going to blow things away. They own this market. It's not AMD. It's nobody. It is 100% NVIDIA. So his guidance, buy it, but have a very long-term outlook. Do not buy it thinking you're going to trade it. And you can trade it based on its volatility. But with earnings season coming up, expect downside. How are you going to buy it? Well, maybe you use the 4-hour algorithm, because the 4-hour algorithm, you can see right here on the screen, makes you 238% over the last 24 months. It may protect you from the downside. Maybe you want a longer term one. Maybe you want to set up a strategy on a weekly candle for NVIDIA, because if your outlook is long term, you don't want to see this 50-day fall all the way down to this 200-day. Remember, we just broke that 50-day. The last time we broke the 50-day, 2022. And how much did you have down after you broke that 50-day? Let's just look. You lived through a 51% pullback the last time it broke the 50-day. Okay, but let's argue about where the bottom was and where the top was. That's a 1,200% move. You could be looking at another one. I'm not saying you're likely to get it, but remember, if you get back down here in the 40s, this was a $3 trillion company. It probably will be there again. The other one that he's super, super bullish on in the Mag 7 is Meta. Come up with a strategy and get Meta. But understand, when we go into a recession, and I think it's about 90% chance we get into a recession at this point, unless there are some emergency measures, ad spending comes down. Meta will make less money. So those are the two that he said. He did say he was a huge fan of risk reward, and he mentioned specifically, look at PE. This is a legendary guy who manages billions of dollars in assets under management. So understand, he was just mentioning PE. Understand what PE is. You can find it on FinViz here. We can go and look at NVIDIA. Okay, NVIDIA PE is right here. Second column top. Watch it. What do I like better? I like seeking alpha. And I like this better because if I pull up NVIDIA and I pull up their valuation and I see that the PE is 34, I can see the forward PE at 22. You can see the forward PE over here too. It says 17. That's estimates. Dan mentioned I like to go by actual numbers, not estimates, not forward guidance, because you're going to see some difference in those. But the actual numbers is what he likes. And he likes 34. And he said it's not horrible. If you go over here to charting, and this is the key, I can select metrics, I can look at valuation, and I can pull up PE right there. And I can say, okay, how is NVIDIA's PE done over the last 5 years? It's low, and it's getting lower. So that's what the way, again, the way these guys value stocks, it's just, it's a masterclass to listen to them talk. And when you listen and then you do your own research, that's where you get it. If you want to read all about Dan's stuff, it's right here. Now let's talk about the news of the day. Because why are you so 4 or 5% down in the market again after yesterday's pullback? What happened? China hit back. So remember all of the quote unquote threats and, everything that came out. Do not retaliate against us. And this is tariff trade. It's not tariff trade. Understand, it was never based on tariffs. It was based on trade deficits. And so Trump has not been smart enough to understand that it's trade deficits, even though he's been talking about it. If you interpreted him, and again, history is the best believer. In 1987, he was talking about trade deficits, but he called it tariffs. And he's still calling it tariffs, but they did the calculation on trade deficits. So April 5th is when the first phase of this goes in place, tomorrow. Okay? I think you're going to see some huge volatility. I think you play UVIXY and SVIXY if you want to trade, if you want some wins. But we have the beginning of an actual trade war. And this is what a trade war looks like. Nobody wins. Nobody wins. And if you think Donald Trump is going to give up on this one, you're not reading the room. So prepare yourself for potential downside. And so I'm just going to show you the chat. And usually I put these things behind paywalls for the paying subscribers because I do want to give them some type of ability. But I raised cash yesterday. Okay? You will be a better trader investor if you start putting in some journal. And what do I use? I use Apple Notes. And then I put it into Savvy Trader, into something that I don't publish, because I can look at my trades every quarter and every year, and I look at them and you learn. Okay, I raised some cash yesterday. It will make again. Let's see what I did. Credo, and I didn't list it probably well because I copied and pasted, but I'll put it in the newsletter in a little better format. Credo. It had an entry in the 4-hour algorithm. I said I'd initially wait to get out of this one. And then I saw how the trade action went, and I said, I better get out. It's down 10% today. Okay? Credo. In the pre-market, it's down 10%. You had an entry in the morning in the 4-hour. I will wait 30 days to get back in. I lost 50% on this position. It's around the $10,000 loss. Okay? Yes, it hurts. I will get back in. What am I doing? Tax loss harvesting. You don't just do it at the end of the year. You do it when you have losers and when you have events like this. Okay? INTA, one of the other top stocks from for the year. This one, I sold half my position. It's down another 5%. I'm going to sell the other half position today. I don't feel comfortable. It was way too big a position. I was down 25%. I'll be down about 27, 28% today. I made the notes. I'm going to sell more as it goes on. I'm just going to sell it now. It's Friday. You don't want to make big moves. But I'm selling. Another one I sold out of completely with a, what did I lose? About a 40% loss, something like that. Dell. I have no hope. No hope in this one. Again, if they are pulling back on some of their AI spend, I don't want Dell. And then you've got tariffs on an already stretched margin. That will kill this company. Another one that I sold out of, ITB. Why am I holding housing manufacturers, the home construction? There's no hope. If we go into a recession, I don't want it. IWM. Let me see. Yeah. So ITB was about $1,000 loss I wrote. IWM, I sold it. No reason I'll hold small caps here. This was in a retirement account. I can't write this off. I sold it. I bought it about, I think it was about 212. I think that's the level that I bought. It broke through there. I was hoping it would get back there. It didn't. Lost it. This was about a $7,000-8,000 loss. Celestica, CLS. I sold out of my position with a 50% loss. This was around $3,000. I'll buy it back. I'm tax loss harvesting this. Okay? That's the goal, is to raise cash during this time. And then I'll tell you what I went into, later in this podcast, because I found an income ETF that saves your capital pretty well and pays you 8%. So, you'll see all that in the newsletter. Sign up for the newsletter. Let us help you grow. FYI, Eric Trump, the mentally challenged son of the president, this was, the news was coming out, and the mentally challenged son of the president said, hey, I wouldn't want to be the last country. Remember, the messaging from the administration was, this isn't a negotiation. And then Eric comes out and says, well, it's a negotiation. And then as the market continued to go down, everybody said it's a negotiation. So understand, the next 10% of the market is 100% controlled by the messaging. The market has lost confidence. And I was watching Pornhub yesterday, and I saw it, man fucks 8 billion people at once. When the big board comes out, you get screwed. You get screwed. Now, this is from 2012. 2012. If the Dow drops 1,000 points in 2 days, the president should be impeached immediately. Immediately. Well, the Dow was down 1,000 points yesterday. And he said it was all in the plan. Oh, they're saying Trump never tweeted this. Well, maybe he did, maybe he didn't. Warren Buffett's laughing at everybody. Warren Buffett's laughing at everybody. He's sitting on his $300 million in cash that he raised from just selling VOO and SPY. He's laughing at everybody. History will always point to this moment as this man being the GOAT. And maybe he knew, you're proven right or wrong. You're going to make mistakes. He's made plenty of them. But again, you don't get to his position without taking some bold moves. And I don't think that history is going to be, oh my God, he sold out at the perfect time. Because remember, his investor letter said, we are fully invested. We are fully invested. So he was still spouting off, confidence in the market. Now, Josh Brown, one of my favorites yesterday. Go and watch this clip. He said they've done something that they haven't done ever. They have moved to safety. So, again, there is a lot going on. News is going to come fast and furious. Jenny Harrington, a voice of, solidarity and peace. 10 months ago in June, the market was at the same level we were at now. And it was up about 14% for the year, following a plus 25% in 2023. And everyone thought they were rich and doing great. Market sentiment matters. Chillax, people. There's always a different reason, but this is all just part of the investment cycle. It's a little different, I would argue. I don't want you to get out of the market. I want you to do what feels comfortable. Okay, because we all have different risk tolerances. And Chris Camillo, how do you see this ending? The clinical take. Countries agree to way lower tariffs than the fictional inflated ones presented yesterday. So basically no change. Or companies pledge expanded U.S. factories, onshoring that never materializes. Maybe that happens. Quote unquote reciprocal tariffs will get lifted. Everyone declares victory, and within weeks it's back to business. You could say that. Okay? This tariff policy mess is so easily fixable. Again, I'll say it again. The next 10% in the market, either up or down, is fully within one man's control, and it's messaging. Leveraged ETFs yesterday, Unless you were short, you got killed. Do not be in these. Unless you know what you're doing with trading, do not be in these. Trump says he's open to negotiations offering something phenomenal. Is this a negotiation? I mean, again, is this a negotiation? Because he's tanked the markets. And in pre-market, you're down about, let's see, NASDAQ futures down 2.62%. And it will get worse because buyers didn't show up yesterday. And he said this was all in the plan. And there are bidders for TikTok. Because when I said TikTok may not actually be for sale because the Chinese weren't showing up to the table, Trump came out and said TikTok sale, they could get the Chinese could get the tariffs taken off if he did that. Now, they declared war and they went with reciprocal tariffs. TikTok might get shut down. I don't think he's going to let it get shut down, but understand, he wants to be seen as the hero, but he's got a law. Congress is the only one that can stop him. And that congressional law may stop him. Now, what I want to show you is yesterday, I just did this FinViz screener, and I'm not going to take a screenshot. I'll post the top 10. But notice what was up. There was a stock, Lamb Weston, okay? Packaged foods was up 10%. You didn't have all losers yesterday. There were winners. Molina Healthcare, United Healthcare was up like 6-7%. CNC, Centene, healthcare plans, get defensive. You see American Tower here? American Tower's a REIT. Dollar General, American Waterworks, Philip Morris, United Health Group, there it is, up 3.3%. Crown Castle, up 3%. Duke Energy, utilities, it's all defensive. Okay, consumer defensive, packaged foods. Lamb Weston, I didn't even know what it's not in my portfolio. There are stocks that are big, considered really risky, and Broadcom is one. Citigroup posted this list. Okay, Micron, Broadcom, onsemi seen as most at risk from tariffs. It could get bad. I did like AppLovin's trading yesterday. Confirms intent to buy TikTok, but we're down another 5%. I liked AppLovin's trading. I liked where it closed at. If we just look at a 5-minute chart, I liked where this one closed at down there. You have a gap above. I thought if, we get some good news that, hey, countries have started negotiating, maybe the consumer's not as stretched, but hey, they're going to double down. And that's the problem. When you look at after hours in this, it's got more leg to go down. So again, find your entry into stocks that you want. Go slow. I think you have much, much more downside. And don't read the room that they actually care about the stock market. They want interest rates lower. And if Jerome Powell comes out with an emergency rate cut, they'll praise that one. And the market may go up. But understand, emergency rate cuts are not a good thing. Don't fight the Fed. It may pop. And you may get a change in messaging. But sentiment is a long-standing thing. Go and look up the CNN Fear and Greed Index. And here, the quant is telling you. The quant from Seeking Alpha is telling you this is the core portfolio. XLK, hold. XLY, absolutely sell. Bank of America, hold. VOO, hold. FBCG, which is the blue chip growth, sell. Strong sell. QQQ, sell. That's the core portfolio. So I want to go over the core portfolio because remember, this is 34 names where you have I think you have a good chance of beating the S&P. So let's go over them. Apple at 194. I'm not buying Apple at 194. I'm waiting for it to go lower. Even though you broke through that 200. I don't like where it's at right now. It's at 195. Is it a good deal? If you're long term, I think it's a good deal. But like Dan Niles said, your multiple is still a little high. So am I loading into this one? No. Amazon at 168. Technically, we've broken down. So where's the bottom? I don't know. But I like where this one is at. If I didn't have a position in this, would I rebalance to get into this one? I would. But I wouldn't load in. You can't go with one stroke and go balls deep and blow your load. Go slow and steady. Okay, Bank of America under 40? Absolutely. But if we go into a recession, don't think that this can't get into the 20s. Berkshire is Berkshire. Add it. It's one of those that you just want to hold. It's down 2% at 515. If you can get this under 500, get it. He manages these things well. Cleveland Cliffs, don't even try and trade this one. Don't do it. Costco at 955. They are up. Look at that correction denier. During this market where we've gone down, this one has reacted. Memberships, you'll start seeing some spending at Costco cut. Now, Dell, I sold out of Dell yesterday. Okay, it's probably coming out of the core portfolio. Why? Let's be honest. HP craters to multi-year lows as tariffs impact IT hardware networking stocks. The problem is margins. If you put margin pressure on this one with tariffs raising the costs, they can't go out there and increase the price to their customers. Because the customers aren't going to want to spend. They're pulling back as well. So not only do you increase the cost, but you also have sliding demand. It may come out. Let's go over Disney. It's a $120 stock. Okay, FBCG, we just went over that. It's a sell. Google at 148. I think it's good. But again, long term. Goldman Sachs, it's cheap. It's under $500 unless we hit a recession. IBIT, just buy and hold it. This shit's up 1% today. Okay, Coke, it's hitting a double top here. Trim it. Buy it back when it gets lower. I like this one to buy it at 60. I mean, let's just look at a weekly pattern of this one. You've had many times where you could have bought this at 60, and you had many times where you could have sold up near 70. It's a trading range. And I've got this one as long term. And so I can buy this one in my brokerage. And the 4-hour algorithm makes you 20% over the last 24 months. Okay, where did you buy in? At 69 and you're at 73. And that may not sound like something that you want, but something that is safer than tech right now is something you want. Okay, Eli Lilly. Hovering around that old resistance level at 790. It's at 773. If you don't think that, remember we talked about how GLP-1s, it's a GLP-1 market. People can't afford it. That's the problem. You still have to pay out of your pocket for some of this stuff. They're not going to afford it. Meta. It held at 531, but it's down 3% at 511. Okay, I like this one. Wait for it. The 4-hour algorithm will give you an entry. Okay, MPLX, this is down 3%. Energy's getting killed because if we go into a recession, energy will get killed. Now, I hold that one for an 8% dividend. I am not getting rid of my MPLX. It's a small position, but it pays me 8%, and I'm perfectly happy. Microsoft at 365. This one, I think, again, Dan Niles said his favorite CEO of the Mag 7 is Satya Nadella. He will manage this one well. He's talked about renting data center space rather than buying NVIDIA chips. He's the first one to do that. Netflix, who's cutting their Netflix? Just hold it. But its high valuation makes me think if there's a recession, you could get pulled back down to the $600 to $700 level. So find a strategy. Maybe you want the 4-hour algorithm. And NVIDIA, Dan hit it on the head. Buy this with a very long outlook. on when spending picks back up. You will see this down this year as Microsoft and other hyperscalers pull back, chip restrictions get put in place, but AI inference requires the purchasing of Blackwell and the next generation of chips. It's just made to have to sit out during this recession. And then you've got cybersecurity. Who's pulling back cybersecurity? This one has dipped. Find an entry. The 4-hour algorithm makes you 30%. You make 72% buy and hold. But we haven't been in a recession. Pepsi, just like Coke, find the position. Palantir, who's holding this at this valuation? We talked about PE. Let's go over to Palantir. Okay, let's look at the PE. The PE on Palantir, 203. Remember, the average PE for the S&P is 20. It's 10 times. Could it go back down to 8? Probably not. But could it go back to 40? Absolutely. Qualcomm, it's chip. They're going to get killed. Absolutely getting killed. QQQ, the 4-hour algorithm has you out. I'm holding. I'm not selling. I'm selling some of my other speculative stuff, but I'm not selling my QQQ right now. If anything, I'm going to look to buy. I don't need this cash. All of my investments in QQQ are very long-term. If I need cash, I have long-term capital gains that I can take it out of there. Roblox, trading stock. Wait till it gets in the 40s, and then you can sell it in the 60s. Shopify made a complete round trip. Okay, on the weekly, back to its 200-day, and it broke through. We're at 78 right now. Where's the 200-day? 77, 79. Expect it to go back through. If you have a weak consumer, Shopify is one that will get killed. It's expensive. Then you have Simon Property Group, which again, tied to the consumer. We talked about that one being at the 180s at all-time highs with a double top. Crazy. Tesla, there's an article in Seeking Alpha that somebody just brought down the brand their target on this one. This one's down 4%. I'm shocked at how well this one's holding up. Okay, Taiwan Semi, this is just another chip thing. If we start to see chips just roll over, and you may see a China war. Again, they may say, hey, we're in a tariff war with the U.S. We might as well go in and invade Taiwan because Trump won't defend Taiwan, and Taiwan can't defend itself. VOO. Just is what it is. Okay, Walmart. At some point in time, Walmart becomes a buy. It's cheaper than Costco. Go with the PE. There are two retail stocks that I want to own. It's Walmart and Costco. And if Target picks up their game and I start shopping back at Target, I might look to get back in there. XLK, do not buy technology right now. And I don't want to sell it at this price, but I do want to buy XLU at the price that it's at. XLY, do not buy this one. Again, we're in a different market than this portfolio performs. So cash is going to perform far better than the core portfolio. Now, the core portfolio shouldn't fall as fast as the S&P. And XOM, did I tell you this was a $120 stock several times? And that here in December and here in February and here in March, you could buy this one at $100. It wasn't going to fly up in one day to 120, but when you get to 120, you sell. Okay, and I've got long-term capital gains in this one, I believe. I haven't sold it. I'll look to add to it again. It's a super small position, super, super small. Overall, I'm moving my portfolio to savings. Why? It's safety. Earnings season coming out, probably weak. What CEO is going to give you great guidance with the chaos that's going on right now? Tariffs. I think they're negotiated, but you may see huge downside because the market is not pricing in the actual tariffs. The market is pricing in the news of the tariffs. The actual implementation of the tariffs, that's not priced in. So then you got a Fed meeting on May 7th at 2 p.m. We get the announcement on May 7th. It's already priced in that you get a reduction. What if they don't reduce? And what if they double down and reduce more? What sentiment does that send to the market? By this time, I want my portfolio into some type of safety. Now, that might mean MPLX because that pays an 8% dividend. But if this comes down with oil and gas and energy because demand for energy is down, you could get this one down 10%. So the 8% commission means nothing to me. Or I'm sorry, dividend. So what do I want? Well, I talked to a couple of friends yesterday, and I said, a couple of friends who sold their house, and they said, hey, we've talked to Stuart, the guy, again, most of my friends are with Stuart at Fidelity, my guy. And what do you want? Well, and they said, you know what? This FFRHX, and again, get a financial advisor. This one's cheap, expense ratio 0.73. Take a look at the dividend. Look at the trailing 12-month dividend, 8.32%. And then you go and you look at the actual 1 year, you're down 2%. You're down 2% on this one, but you've made 8% in dividends. Okay? Against SPY, look at how SPY's coming down to this one. Okay? This one does not have the volatility. That's 1 year. Look at 3 years on this one. While you're getting an 8% dividend, look at that steady line. Doesn't work for long term, but when you're in something like this, you can get that. The other one that I have is FZDXX, which is the bond fund that Fidelity holds my money in. This has a 7-day yield of 4.16%. Remember, that's not 4% in 7 days. It's 4% annually. But they pay it out on a monthly basis. But they calculate it on a daily basis, and it's yielding 4.16%. So I like this FFRHX. I like it. I like it a lot. Let's talk about one of the Substacks that I read yesterday. I asked ChatGPT to build a trading strategy from scratch. I will put this. This is from the Rogue Quant. Fantastic. Step by step, what he did with ChatGPT. You can do it with any one of the AI agents. Okay? He traded in TradeStation. He dropped his and he did it with futures. Okay, I would not suggest somebody who doesn't know about trading futures go in and trade on futures. But he built this. He back tested it. He analyzed it. Okay, again, asking questions. It was just a masterclass. I'll put this in the newsletter. And why do I want to own Amazon? One of the reasons, look, they're launching a buy for me AI agent that shops on other sites for you. If you haven't used, I'm going to say Apple's Smart Assistant, because if I say it, she all of a sudden wakes up. If you haven't used that one and know how bad it is versus how good Amazon's is, even Google's is really good. Okay? These AI agents are coming out with even more fantastic ones. But again, I like Amazon for this one. And then a recession-proof one, okay? Or a tariff-proof stock that has been doing really, really well. It's down 3% in pre-market. It was down 1% yesterday. Is Spotify. So if you listen to me on Spotify, expect more ads. Remember, the Substack version of this podcast comes ad-free, or you could get YouTube or Spotify Premium to go ad-free. The rate on Spotify pays me for my ads. It's crazy. I don't even look at the demographics. I just see the rate that they pay me versus what YouTube pays me. I think the rate that Spotify pays me is like $32, but the rate on YouTube is like $7. Spotify's making, I have a significantly larger audience on Spotify than I do on YouTube. So I know they're charging the advertiser a lot for Spotify ads. I don't know the stats, but if you listen to me, say hello sometime. Because again, yesterday I told you, Spotify, you can rate me down below. YouTube, give me a thumbs up. You know, Apple, you can write me a review. And if you're on Substack, just give me a hi. Just give me a hi. You can reply to the email. You can comment on the email. Just give me a hi. Or you can go to our Facebook group. It's all on Linktree. And you'll notice I am not pushing tools today. And the reason I'm not pushing tools is because I want you to figure out your system. And if your system does have tools and you want TrendSpider, you can get TrendSpider. It's on sale, 40% off. Okay? You can get it for a very reasonable $91 a month. And if you're not trading enough to either save you $91 a month or to make you $91 a month, we talked about UVixy. We talked about you can set up alerts in TrendSpider to tell you when this one goes nuts. Okay? Set up an alert. You can do this one. Let's see, 65-minute algorithm. Let's see over the last couple of days where it's gotten you in. You know, here, it got you in 28. You're trading at 35 right now. Not bad. That's the 65-minute algorithm. Look at it all the way up here. As we've started to go into this tariff war in late March, you've made some good money on UVixy. Now, let's see how it trades on the 1 hour time frame. Let's see. You know, 1 hour time frame got you in here March 25th, got you out. Would I have gotten out? Probably not. You know, again, hindsight's 2020. I probably would have gotten out probably here at the 6% range, even with this buy. And then you're back in at 28. You're at 35 right now. Again, those are strategies that don't include extended hours. There are far better strategies. So if you want TrendSpider, go to Linktree, click on that top offer. Okay? Now, if you want Seeking Alpha, you can get Seeking Alpha Premium and Alpha Picks. You can get the bundle and save $159. Or if you want to see the quant, we talked about the quant rating on a lot of these stocks. You want to find the top stocks from a quant rating. Again, KINS is a top rated stock. This one is up 11% year to date. Okay, the last 5 days, it's up 2.73%. Name a stock that's up that much. That's the top stock in the quant. So if you want the quant and you want to trade the quant, you can go and get it. And you can get a free 7-day trial. Okay, right here, third link. $30 off, get a free 7-day trial. The newsletter, fifth link right down there. Webull, I have a Webull account, a Webull trading account. And boy, my NVIDIA, it is mostly NVIDIA and IBIT. And holy crap, the NVIDIA, I went negative on. It's a long-term buy and hold, I thought. I should have been trading it. This account was up near $13,000. And look where it is now. $9,000, $9,500. NVIDIA, let's see. Since it opened up, I've lost 16% on it. IBIT, I'm still up 5% on it. That shit's up 1.22%. I think people are flying to safety in Bitcoin, believe it or not. So there's a lot going on. I didn't want to push tools. I waited till the end, but do not panic sell. Chris is saying it right. Don't panic sell. If you consider panic selling, write it down, figure out a plan. Okay? You can get rid of, say you own 10 shares of something. Go and sell 2 of it today. See how it feels. Wait the weekend. You might lose more money, but understand cutting your losers right now is a good thing because I don't think we're done going down. Tax loss harvesting. There's a saying, sell in May and go away. Because, and it has to do more with, sentiment and seasonality. It started way back when with planting and people were out planting and doing harvesting and stuff like that. So they didn't have time to buy and sell stocks. That's no longer true, but it's still true that these fuckers on Wall Street go to the fucking Hamptons on the, during the summer and you have lower volume. What drives stocks up? Volume, buying. What are these guys going to do? They're going to take their 2%, they're going to go to the Hamptons, and they're going to say, God, that 62-foot yacht that I wanted, oh, I can't get it. So find income strategies, find something that can actually make you money, like the ones that I mentioned, FFRHX. Go and research that. You type that into Seeking Alpha, it will lead you down a rabbit hole. Go and ask Perplexity about FFRHX. Go and ask Perplexity about what stocks are safety, like I posted yesterday. Go and ask. There are stocks that are going up. But if you're involved in the Mag 7 and some of these high growth names and trades, understand you are getting taken down. And there is one person who's in charge of this, and he has said for almost 30 years that he wants tariffs to be equal. He's talking about trade. He's not talking tariffs. So until that gets through to him, and it's not getting through to him, then we're in this situation. So again, I don't want to scare you. It's Friday. This is a summary. I've gone on for long enough. Let's see how long I went. What did I do? 45 minutes? I did 51 minutes. So if you listened, I appreciate it. I am not putting out a paid newsletter because there's really nothing to buy. But if you have things that you want me to ask about, go over to the newsletter and you can chat with me. Just chat in the chat section. You can ask me questions. You can also go over here to Linktree and you can join our private Facebook group. I answer questions in there all the time as well. So if you have any questions, DMs are open. There's always ways to get in contact with me. My email is up here on Linktree as well. Have a great weekend. I hope something turns around today. Again, by the time I record this, news could have come out and it could be better. I don't know. I hope it is. But I don't have too much hope for the market. So I'm not, just so you know, the percentage of cash that I have is around 35%, I believe, after yesterday. So I haven't pulled any, I did do some short-term selling, some long-term selling. I don't want to sell my Apple under 200. I don't. But do I have hopes that it goes down, up, immediately? No. No. I mean, you've got a gap here between 207 and 223. I think it fills the gap at some point. I'll start selling it when it fills that gap, but I don't need the money. And I am not the best protector of capital. I've said that many times. Oh, that's 1 hour. Let's see. I don't think there's a gap on this one. Oh, there is a gap. 207 and 215. So not as big as before. No, it is up here to 220. So there is a gap. But have any questions, hit me up. Okay, see you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.